First of all, do you go to Walmart?
I'm going to find myself there soon, I'm sure. That's the whole thesis of this, right? So, yeah. So, thank you for that question. That's a real interesting one. Mark, as Mark pointed out, the other Mark pointed out, we spend a lot of time looking historically at sentiment numbers, right? Let's start with the basics, right? If we're trying to figure out what's going to happen here, if I'm worried about systematic risk, I'm looking at economic growth. What's driving economic growth? The consumer. 70% of GDP is consumers. So I want to know what's the consumer up to, right? That's what I really want to know. If the consumer stops spending, we all have a problem. Doesn't matter what you're holding in your portfolio, we're all going to struggle with that, right? Because all ships are going to go down with a flowing tide. So um, we traditionally would look at the sentiment numbers, right? But as Mark pointed out, those things are becoming less and less accurate, and we've learned that they're not great predictors. They're interesting, and we still watch them carefully. Turns out that they're biased. Turns out that people lie, and all kinds of stuff. We know that we can't rely on those types of numbers as much anymore, although we still watch those things. And what we do watch is we watch the trends, right? So the trends tell us something, right? Are they getting better? Are they getting worse? And we try to sort of go below the surface on those numbers to see. Just don't focus on the headline numbers, of course, because the headline numbers are really just not telling you anything. Some of the sentiment surveys give you a little bit more data to look at. Okay, the bottom line is, at the end of the day, these things are sort of backward looking, they're biased, they're interesting, but they're not predictive at all, right? And so we're all trying to predict what's going to happen and when. And so that's what brings me to Walmart. And some of the things that I'm always searching for in terms of how do I get a read on what the health is of the consumer. So earnings season is exciting to me for different reasons than most other people, right? Of course, I'm looking at all the traditional stuff and my portfolios and things like that, but I'm very excited always during the any retail any retail earnings announcement, right? Because of course the banks when the banks announce, I'm eager to hear what JP Morgan is saying about their retail consumers, right? Their credit card holders, and they have a really good understanding of the ones that are struggling, the ones with the lower credit scores. Are they showing more signs of distress, et cetera? So I'm looking at those numbers. Those are real numbers. That's watching what people are doing versus what people are saying, right? And so I definitely am a big part of that. So what are we seeing at Walmart? Some really interesting trends at Walmart, right? So we just recently saw that Walmart just cut prices on a whole bunch of things. And everyone was celebrating it, saying, oh, you see, things are probably getting better. Walmart's lowering prices. That means, inflation is no longer going to be a problem. They're doing it to help the consumer right now. And the reality is that, anyone who follows economics knows that, Walmart is not going to cut prices unless they absolutely positively have to cut prices. And why would they cut prices? Of course, competition, but because of demand destruction, right? Because people are not buying things, right? So they have to lower prices. And so that's your first hint that something might be questionable, right? And so you start to look at Walmart, then you look at their competition, Kroger, right? And you look at these companies that have these low margin products, and they're cutting prices on low margin products. And we know that the input prices to these things, costs of these things, is not going down. It's going up also, right? Because of everything that's going on right now in the world. So we know that there's something there, right? So we know that there's some struggle that's happening, and we're hearing it. And so now we start to dig further into Walmart and what's going on at Walmart. And something very interesting. You asked me a question, do I shop at Walmart, right? So, everyone assumes that Walmart is the place that America shops at, that everybody shops there, because, and everybody does shop there in one way or another. But it's not clearly not a luxury type place, right? It's there for its rock bottom prices, their price rollbacks, and all that type of stuff. And so you assume that there's a specific consumer that shops there. But what we've learned over the last couple of quarters, actually starting in 2024, is that their biggest growth is coming from consumers that have incomes over $100,000. So what you're starting to see now is you're starting to see why are we seeing this, and we've seen it consistently, quarter after quarter, that they're announcing that their biggest growth is coming from these high-end consumers. And so to ignore that would be foolish, right? Where are these people coming from? Is it because Walmart has such great assortment of products that suddenly even wealthy people are finding themselves in Walmart? Where we know what the reason is, because prices are going, prices of everything is going up. People can't afford the prices. People are trading down because they have to, right? They have to. We know other consumer data. We know the savings rates are going down. We know credit card debt is going up. So all the signs are there. The reality is there. It doesn't show up in the numbers when you see the retail sales numbers, right? Because it's skewed by higher prices and things like that. So if you just follow the mainstream narrative, you think the consumer is healthy and the consumer is just going to keep going and going and going. But when you start to scratch the surface, you start to see this happening, and you start to see wealthy consumers moving to Walmart. You have to scratch the surface a little bit further. Just recently, we got some data from Equifax. I don't know, it's like it's a credit rating agency. They just came out with their outlooks, and what they do is they break up consumers into three buckets, right? So they're the people who've made it. They don't call it this. There's a word for it, right? The people who are stuck in the middle, and they're the people who are aspiring to do better, right? And of course, not shockingly, that bucket of those people who are struggling, that's a big bucket. And guess what? It's growing. It's getting bigger and bigger and bigger. The middle is not growing at all, and the upper is getting smaller, right? And so these are the people that track credit, and they track people who are struggling, and they know what's going on, and they track these buckets. So it's very, very clear, first of all, something that we all probably know inherently, that there is a K-shape that's going on out there. There are people that are struggling, people that are doing well. It's not probably news to anybody in this room that the bulk of consumption growth in this country right now is being carried by wealthier consumers, right? So the wealthy folks, they're still shopping like crazy. The people who are struggling, they're struggling, and they've been really struggling over the past, I think, 12 to 18 months, right? They're already done, but now you're seeing the upper K starting to struggle. So that top tier is starting to move down. And so these are the signs that I'm watching. And when you watch these things at Walmart happening, again, it's such great data because it's a lot of data. It's not just like sparse data that you can actually literally follow this type of data. And you can hear, and believe it or not, during their earnings announcements, they will tell you that, and they have been telling us for the last several quarters, that their less affluent clients are struggling, that they're stretching their budgets, and they know this, and they know this. And how are they keeping their, as a customer? Why do I invest in Walmart as a portfolio manager? Because they are now commanding the complete spectrum of customer. They figured out a way to hold on to these customers, and of course they're doing the right things. They're lowering prices on their loss leader products because that is what a rational company does, and they're acting rationally. But let's also remember, a lot of these companies, a lot of their earnings are now skewed because they're getting these refunds from these tariffs, right? So Walmart got this big tariff refund, and they decided to invest in cutting prices and taking losses so they can retain the struggling consumer. So this is where I struggle. This is where I'm trying to figure out, I know the consumer's struggling. I know there's going to be this reconciliation at some point, as I hinted to earlier. Question is when. My feeling is if you asked me today and made me tell you a time, I think we're good between now and, let's say, I can see 12 months out from now realistically. I think within 12 months, I think we're fine. But we're going to have to watch this very, very carefully, because when that really starts to crack, it's hard to turn that ship around, right? It's like turning around one of these aircraft carriers that we all saw, stumbling through the Hudson River over the last couple of weeks. It doesn't happen on a dime, for sure. And so the aircraft carrier is moving with the tide right now, and it's slowly moving in the wrong direction. And that's how I'm looking at things, but at the same time, still buying stocks, still constructive on the market, but very, very carefully, very, very carefully, and with a hair trigger, with a hair trigger finger on that stuff.